Manish Gangwal, CFO and Strategic Sourcing Head, President there. Gulfoil is joining us. Manish, afternoon. Manish, first of all, I'd like to understand with you that we saw a sharp jump in your sales volumes in Q4. What has led to this sharp rebound, and do you think this momentum is sustainable?
Yeah, thank you. Good afternoon. I guess every quarter we have been outperforming not only the market and the industry overall. We have been growing, nearly 3 to 4x the market growth rate in terms of our volume quarter after quarter. And same was the situation in March quarter as well, where our volumes have gone up by nearly 9% and revenues have gone up by nearly 24%. So that has been our trend, and we have been getting market share across categories, both in B2C and B2B segments. Our focus on gaining market share continues. So that has been always our trajectory, that we will outgrow the market and gain market shares.
Right, Mr. Gangwal. So you're talking about, gaining market share. Focus is going to be on that as well. So two things in terms of trajectory that I would like from you is what is the market share that you're going to be looking at in the coming years, whether FY24, FY25, and also volume growth. What should it be? That one kind of volume growth are you expecting to see in FY24 then?
So usually we grow, as we say, 3 to 4x the market growth rate, and we give sort of internal targets are that at least, we will be delivering that kind of volume growth. Of course, the last year has been that there have been significant increase in the input cost. So the revenue growth you see is even higher than the volume growth because of a lot of price increases which we took to pass on the input cost to the customers and consumers. So that was the scenario. Now the prices have stabilized. So the revenue growth also will be more or less in line with the volume growth. And we continue to, drive our internal teams and capacities to deliver 3 to 4x or, at least 2 to 3x the market growth rate. So that's been our focus, and that we will continue in the current year as well.
What about how is the replacement market demand? Because we see that all the automobile space is like buzzing right now. There's a lot of traffic on the roads, and even highways are seeing good toll collection. So I'm sure that replacement demand would also have gone up.
Yeah, so there is a good traction, except the agri segment, which we have seen still not recovering to the extent it should have. All the other segments have recovered post-COVID and actually are above the COVID levels, pre-COVID levels now. And at the same time, what we are also seeing is that, whatever the new vehicle sales which is happening, that comes to the market after, a gap of 2 to 3 years in terms of lubricant demand, because for the first 1 to 2 years, it goes to the OEMs back in the franchisee workshops. So there also in the OEM segment, we are seeing a very strong demand because we are with more than 30 OEMs today. We are catering to their, right from their factory field to their workshops and franchisee dealerships. So there is a good traction in OEM currently, which eventually will also reflect in the retail open market or bazaar market, what we call it, in the next, in this year as well in the coming years. Right up to 2025, because there is an excellent vehicle demand we have seen across categories.
Okay, Mr. Gangwal, thank you so much for joining in with us, giving us an understanding on what should we be expecting from the company going forward as well. Thank you so much for joining in with us.